Welcome to the Real Estate Show on KMED. December 17th is our date. Pete Belcaster and Joe Brett, the real estate guys, with you. We're both real estate brokers with John L. Scott in Southern Oregon, and we get together with you once a week here on KMED. We'll talk about all sorts of real estate-related issues and topics through 7.5 years and 350-some shows. And, well, today we continue that great tradition of great guests and great topics, Joe, and that's what makes it fun to sit around here every week and kind of yap about something that we really enjoy doing and that affects so darn many people and has such a big effect on the economy, and that's real estate.
We're just the conduit, really, Pete. You and I are with our media background and our love and passion for the real estate industry over the last 10 years. And the best thing we do is, you said it, we bring in great guests that bring in timely information and insights into the local market that are hard to find anywhere else.
Well, we hope that you'll also go back and check out some of our past shows. They're available free of charge at realestateshowOregon.com.
You can binge watch if you'd like. You go back there and watch.
Yeah. We could do that for like New Year's Eve. Binge watch
the weather gets really
show.
bad and satellite goes out. We can't watch football games. That's what I would do.
You'd really be bored if you wanted to do that. Anyway, today here on the show, Guy Giles is with us. He's our resident expert from mortgage, all things mortgages from Bank 34 in the Rogue Valley here. Guy, nice to see you here, by the way. Merry Christmas to you. How are you doing?
Hey, Merry Christmas.
Yeah.
I'm wet.
It's been really quite a week. Yeah, it's a lot of saturated ground, and you can anyway. Yeah. So so what else is? I mean, we've talked about interest rates. At some point, we're going to start to go the other way, and really, so it's just happened. I mean, this is just happening to us right now, right?
It actually, I watched this really close, and in this election, we all thought we were going to get one winner. We ended up getting the other, and now there's just a ton of optimism out there as to what's going to happen with the economy. And unfortunately, with that comes higher rates. But that said, they don't do that unless the whole economy is looking a little bit better. So that'll mean that your bottom line will be better, and hopefully the whole thing will just kind of move up together.
Well, yes, and look how our economy in Jackson County has improved over the last several years. So we're seeing that as a result of that. So we're all we've been preparing for this time for this particular moment for some time, and now it's here. So
and we're sitting here apologizing for a low 4%.
Yeah.
Can't do any better than that.
Yeah, in the grand scheme of things, it's still really good.
Yeah, exactly. Boy, we get weaned on certain things, and we really like them that way. Frank Maney is also here from Tycor Title, and Frank's been on our show many times over the past 7 years. And Frank, nice to visit with you.
Good to see you again.
How are things at Tycor Title? What's going on out there in your offices?
We're keeping really busy right now. We're seeing a little bit of a drop off in some of the refinance activity with the rising interest rates. But a lot of the realtors I'm talking to, I mean, they're busy. Their phones are ringing. They're getting inquiries. They're looking for properties. We're seeing prices going up. Even I'm hearing some prices are kind of softening a little bit in some of the new construction. But I think overall, a lot of the articles I've read about people on the move around the United States, they're coming to the West. I mean, top cities to live in. I think the majority of this article I read, of the top 20 cities, 11 of the cities were in California.
And I guess that's a good place to go. I hope you continue to go there. I
come to California. They're coming to Oregon.
They're coming,
more people move to California. More people move to Oregon.
They're going to Portland. They get to Portland. They're going, okay, well, it's too busy.
This is a little weird.
Yeah, I'm going to Southern Oregon. Okay. So we're moving around to the West Coast.
Last week, Mark Baird, who was an appraiser, was in here, and of course, right now, you can't get an appraiser very quickly in Jackson or Josephine County or Klamath County. It's 4 months to get an appraisal done, it seems. But what he was saying because he didn't think there was a shortage of appraisers. Remember that? Guy, your experience with appraisers, I will ask you this. He says it was because there was so much refinancing going on that took the extra business out of the way. And so appraisers were busier doing that. So he doesn't think that's really the case. But I don't know. There was a lot of activity, real estate activity a year ago that didn't cause that.
Reiterates what Frank just said, the transactions for refis have slowed down a little bit.
Yeah, sure. So maybe that could be a sign of the appraisal, may be able to do that. Guy, before we go on to interest rates, what is your thoughts about appraisals? What has your been experience right now? Because we've been telling our listeners that if you go into a transaction, you may have to require 45 to 90 days here maybe to close this thing.
Yeah, I would say about 70 to 80% of what I do are VA loans. So they actually have a tighter time a table on when they have to have their appraisals back. So it's like 14 days now. It was 10. So that's business days from when you order the appraisal. So,
Jesus.
so I know
That's not the case, and certainly most my experience and others is that's amazing. I didn't realize that. Okay.
We're seeing 3 weeks right now. Thankfully we have our appraisal panel, so we don't have to go through an AMC, which is kind of nice and legal, believe it or not. As long as we don't pick the same appraiser every week, or for every one, we do kind of a round robin thing. So we were able to handpick some good appraisers that like working for us because they get their full fee. So I would think that we'd get ours back a little bit quicker than some other people, but I've also seen people stepping up and charging $700-800 to get their appraisal back really quick.
And that's what we're also saying. What do they call it? The fee for premium service or something, whatever that was. Yeah, you can pay $300-400 more, maybe get someone to take your appraisal quicker. But to me, that just seems really wrong to do that.
To the front of the line.
It is, and we're still getting ours back relatively quick. Like I said, our appraisers like to work for us because they deal directly with our bank, and we're not beating them up over a bunch of revisions unless they write the street name down wrong or do something.
Sure. Frank, what are you hearing at Tycor in your meetings? Are escrow agents and officers, has appraisals been slowing things down there, or tell me what you've been hearing there?
No, I'm hearing that around town too.
Okay.
I mean, I'm hearing some appraisals are out as much as 5 and 6 weeks, and some of the loan officers that I've talked to around town have said that they've had to go back and redo loans or relook at at locks and interest rates because they can't get the appraisals done, and some higher prices.
Cascading effect to the buyer.
Exactly.
Well,
so it's kind of been a problem.
I think the biggest one is the rural properties. Make sure you allow time for your escrows on them, because the reality is if you're getting paid $500 to do an appraisal, $500 to $550, and you're going to charge a little bit more for out there. But if you have all the comps in the world right there in the subdivision, they're going to be a little bit more apt to take those ones.
Isn't it?
Than the rural ones. So those do take a little bit longer than the regular ones.
The most interesting part of that whole discussion, by the way, and you can hear it back on at realestateshoworegon.com, was when we were talking with him about apprentices and how you become appraisers. And I asked him, remember, when was the last time you had an apprentice? And he said 12 years ago. There's nobody kind of coming up there. So anyway, that's a real interesting part of real estate that is out there that is really has to undergo some big changes.
Our building trades as well.
The building trades as well. And I've even put on our website where they're seeking apprentices, which are skilled laborers for electricians and electrical work and all these kind of things. So, there are opportunities to become a pretty skilled and a pretty well-paid jobs by doing those things. Okay, back to the interest rates here. We're with Guy Giles, by the way, from Bank 34 Mortgage today, and Frank Mania from Tycor Title on the Real Estate Show today. So, okay, I mean, we've crept up over that little 4% mark. Who knows how far they may go or not go, but what does it have? What type of effect is this having on the market here so briefly that we've had this?
Well, if they go up, I mean, you could be looking at, on a couple $100,000 house from where they started jumping up to almost $100 a month more. So obviously that takes away, your purchasing power. Just beyond that, you don't want to get in over your head anyway. So it's just one of those things that it just makes it more costly to do it. But by the same token, and you have maybe other assets that are doing a little bit better, or businesses doing, you might get a raise because the economy is growing a little bit. So there's, give and take to everything. We always knew that these rates would have to go up at some point, and I think they went up a little quicker than I expected for sure. And I try to watch this, pretty much every day. I didn't think that anything would happen this quick, to be honest.
Now, when you say they go up, is that for across the board? Is it conventional, USDA? Tell me what each of those happen to each of those then.
Yeah, they all pretty much go up the same. They're trading, they're buying the mortgage-backed securities. They're, and there's just kind of a set price on what you get. The government stuff is always historically a little bit lower, maybe a quarter to half a point. I mean, everything that we talk about is going to be kind of credit score driven, loan to value driven. So that's why I rarely let you kind of nail me down on the rate thing, because if you come in, if I quote you a 4.25% rate and you have if I'm doing a manual underwrite on a VA person, they actually might get a little bit better than that or a little bit worse, just kind of depending on their credit score. There's a lot of factors that go into quoting an accurate one, but But I would think as just a general rule, they've gone up, almost 3/4 of a point since the election.
Wow.
What?
Yeah.
That's pretty high.
And I didn't track it exactly.
What do you think has spurred that confidence, or that to have that happen? Even before the holidays and the first of the year have transpired.
Well, I don't want to get political, as far as that goes, but I think for the first time in a lot of years, there's some optimism about the economy. I mean, they've been looking for an excuse to raise rates for a while anyway.
They have been. I agree with that. Yeah,
they needed to. There's still a lot of uncertainty over in Europe, and if you lose a couple of more places out of the EU, then that's just going to weaken them, and then people are going to be looking for better places to put their money. And if they feel that they can make it in the stock market a little bit faster than they can in the mortgage-backed securities, it really is a matter of where you're putting your money.
All right. Does this open up opportunities for people, for buyers or investors, or is there a good side to this that affects this? I mean, you talk about more. We're doing less refinancing right now because the interest rate went up, but you say it brings back other adjustable rate mortgages. Tell me how that works in the system.
Well, I think it's going to work a little bit different this time around than it did last time around. We had really loose lending, and I don't think that we have any kind of an appetite for that anymore. I mean, I think you'll see some things loosen up a little bit over this year, just by virtue of people want to do loans, and it's a really good long-term way to make money. So I think they'll loosen up a few things, but we're not going to go back to the old days where you come in and you qualify for a 1% rate, and literally they're charging you 5% on that money, but you're only paying 1%. And the old conventional wisdom was, well, my house is going up at 8% or 10 or 12%. So if I'm losing a little bit of equity, I'm still ahead every month. And the investors at this point, they want to qualify you on a little bit worst case scenario. So they'll they're not just going to go in and say, hey, this ARM is at a 4.1% or 3.1% rate. That's what we're going to qualify you on. They're going to qualify you on a little bit of a higher rate, so you have that buffer in there to do it.
What does it mean, Frank? We had double-digit increase in value at Jackson County. It was 11.5%, something like that, 11.33%. What do you think of that particular thing thrown into this now with higher interest rates and double-digit increase in value?
Well, I think obviously it's good for the homeowner if you've been in your home. We're getting values that are coming back to where we were a few years ago. Okay, are we going to get to the point where housing is just going to be completely unaffordable for a lot of people? That could potentially happen.
That's a big scare.
Well, the affordability index changes now with this.
Yes.
I mean, it's going to make it.
And the new homes that are being built are not affordable homes. They're catering to a higher market.
Not to the first-time home buyer, but let's kind of look at where we're going with first-time home buyers. The average age of the first-time home buyer now is going to be like 32 years old. So
interesting. Yeah.
So let's kind of look at out of high school into college 22, out of graduate school 25. You still got debt. Still got another 6 or 7 years before you're going to be looking at
debt to income ratio. Yeah.
Exactly, before you're even going to be looking at buying a house. And I've got a daughter that's actually in that situation up in the Portland area, and she's going to be 33, and they still haven't bought a home yet. She just got married a year ago. And both got good jobs, but I mean, they're in a nice area, Lake Oswego. Can't wrap their head around a $2,800 a month house payment and on a 50-year-old house.
Count me in on that one.
And I can't blame them for that. I mean, that just doesn't work.
Yeah.
So they're diligently they're saving their money so that they can get into something nicer and get a payment that's a little more affordable. They're very debt conscious, and I
good for them.
And I think though, with that first time home buyer age moving up to 32, they are going to be a little more cognizant about debt and how to deal with it, because a lot of these kids have seen what their parents have gone through. We've seen parents moving in with kids moving in with parents, and grandkids and all that kind of thing because of what's happened in this last real estate crisis.
And you're right, as they grow up, they've seen all of that. And this is actually, Joe, the 10th anniversary of our real estate licenses. It was December of 2007. Or ninth year, I guess it is. I'm sorry, ninth year. We're going to the 10th year. The economy, everything was so different then, and how much that has changed all for the better.
As we were studying and completing our licenses, it all went off the cliff.
Everything went bye-bye, the whole market.
But we're still here because
it's amazing how it's changed and how it's bounced back. And now this is the first time in this 7 years that we've done our show that interest rates have changed and kind of gone up a little bit. How the market is going to be a little bit different. You're going to have to work a little harder at it because you're not going to get as much house, right? If you can't qualify for so much loan from Guy, those kind of things. So you got to be a smart real estate consumer when you get into this kind of situation. It really calls for good agents and good communication to get you the best buy that you can. But boy, it does. Everything's off the table now, isn't it? Everything changes, and that's what makes it interesting, I guess, in a supply and demand market. We're with Guy Giles and Frank Mania today on the Real Estate Show here on KMED. We've got a break coming up. Don't you dare go away. We've got a lot more to talk about. Guy also has some new info about VA loans, so there's still some good news out there. The Real Estate Show rolls on KMED. December 17th is our day. Hope your holiday season is going terrifically, and please go out and do something good for somebody else. Really neat to see realtors all around the valley collecting all sorts of food and coats and giving it away. The Medford Earth Angels Foundation at John L. Scott, I know their agents working on that and everything. It's really neat to see. It's a wonderful time of the year, isn't it? It's true about that.
And we've learned from a lot of our great colleagues and associates in all of our real estate associated industries. It's a year-round effort on their part. We have a number of people that are doing things on a daily, weekly, and monthly basis to make our communities better beyond the professional great service that they give.
They really are. It's what makes our valley so special is the great giving that everybody does. Well, today here on the Real Estate Show, Guy Giles, who's our resident expert from Bank 34 Mortgage, is in the house, along with Frank Mania from Tycor Title. Before we left there, we do want to say that one of the things that Guy brings up, and I think is really important, is that, if you're out looking for a house right now, and we've seen the interest rate go up a little bit, you tell people to check, right? Check what now? What do you mean by that?
Yeah, I don't think it's a bad time to go in and talk to whoever you're pre-qualified with. I mean, if you'd have gone in and you would have got pre-approved and, say for a VA loan with me in early November,
what was the rate then?
I would have probably, assuming you have decent credit, I would have probably been around 3.25 with a big credit back to you at that point.
All right.
I actually haven't priced a VA loan out in a couple of days. Today, after the Fed raised rates, we had another ugly day for mortgage rates.
Okay.
But I would think. Well, anyway, across the board, we've come up quite a bit. So the moral of the story is you might want to go in and check. And if you've been out looking for $250,000 houses with your real estate agent for the last 2 months and haven't found anything you like, you might want to get with your lender for a minute and just check and say, hey, look, am I still good for this amount? And, a lot of the buyers, what I've seen over the last few years, are people that come in that have watched their family, friends make mistakes and lose houses or get modifications or do things that they really didn't want to do. And they were not maxing themselves out at all. And I've had a few people over the last, couple of months, it's like, what's the most I can get qualified for? So if you're buyers, or if you are one of these people that's kind of a little bit at the top or was at that point, you just might want to go in, get your rates kind of reran.
Makes sense.
And just make sure that you're still ready to go.
Yeah.
Because inventory's tight and you need to look in your price range that you're going to be able to actually execute that loan on, or it's going to do nobody any good to get an offer in that you can't then come back and get the loan for and have the numbers come together for you.
Absolutely. And one thing that Frank kind of brought up that is, could be a little bit of a positive with these rates going up is, houses are going to move. People are going to move. Things are going to happen, and it's still a market that's going to go even in the 80s when rates were 18%. People were buying and selling houses. So one of three things will loosen up, if not a couple of them, where the rates would come down a little bit, which they're really, really low right now, or the housing prices could come down a little bit, or they loosen up the lending standards. So there's probably an appetite to loosen up the lending standards a little bit. So I would assume there's probably going to be a few changes coming in 2017. Not a ton, but again, they're going to look for ways to do loans, but it's going to be more of a make sense way. you're still going to document your income and your assets, but they might not beat you up so hard over the last couple of years. We're finally seeing some.
Well, our problem in the valley is just simply no inventory still. I mean, in terms of how residential housing market, it's the inventory that is so low, especially in that $150 to $250 range and the $250 to $350,000 range. There's simply just very, very little there. So that's really driving that part of it. The upper market is a little bit, there's a lot more there. Anyway, so we'll see what happens with this. Frank, what do you think?
And you had made the comment too, Guy, about some loosening or changing in some of the lending standards and in adjustable rate mortgages. We saw a whole new variation or variant to the adjustable rate mortgages in the last couple of years. Back years ago, I mean, the adjustable rate mortgage was a very popular tool.
Yeah.
But the standard was if you were applying for an adjustable rate mortgage, you were qualified at the high end, and there was usually a cap on the adjustable rate mortgage. Right. We didn't see that here in the last couple of years. And I mean, correct me if I'm wrong.
No, the only adjustable rates that I've been selling over the last few years are, people that just want to utilize their money for a while and have it in at that low rate, and then they had the money in the background to pay the thing off. We're just now starting to see people wanting to get back into the market and get a little bit more creative, like they were. I mean, if you look historically, adjustable rates, they're always lower than the fixed rate mortgages are, and they're scary. I mean, I'm in a fixed rate mortgage, so don't get me wrong.
You are? Well, I'm not. I'm in one of those adjustable rate mortgages every 6 months, and that thing was 2.2, 2.5 for years. Now it's climbed. It's like 3.3 the last time, and it's going to go up again the next time. I'm really not happy with that. Yeah,
it's terrible.
Well, it is. Anyway,
well, you'll have your deck done, and
my deck will be on, and then I'll sell my house, and all will be fine. Right, it's going to recoup all that money.
You might have to submit that to a condominium declaration or something and sell out part of the rooms.
Oh my God, it's out of that thing. Well, I'm just real. It's an interesting time. We are in the middle of winter, and it certainly seems that this is still a good time right now to be buying and selling because there's fewer people out, but they're actually more interested in buying right now, and you actually get more money in the winter by 1.2% more average according to the NAR. So. And there's a lot of activity. Well, we'll see what happens with interest rates, Guy, and everybody watches it. I mean, it's one of those things that you watch all the time. Frank is here also. Frank he heads over to So Ready. He's on their board. I think he's on the Home Builders board. I think he's on like more boards than anybody that I know. Maybe it's like Brad Bennington. This is the only other person from the
They're probably
Home
on like
Builders.
3 boards together.
Anyway.
I'm getting off some of the boards.
Yeah, I've said that too, and it's really hard to say that.
I'm trying, dude. Yeah. I'm trying.
But you go around commercial. You go to these things. You know what's happening around. Just give us an update here at the end of 2016. It was a pretty good commercial year because there were years in here when you were coming in here and there was no activity going on either.
No, and of course we've seen the expansion over by Trader Joe's, the next phase of that project there, and I think the last time I was on the show we were talking about what was happening, and I had said you're going to be shopping at a whole bunch of new places this Christmas, and here we are. I mean, and there's businesses coming in that I didn't even know were coming in there, like the Ram restaurant breweries coming in, and I saw Black Rock Cafe, the sign go up for that group there. So there's going to be a lot of new businesses coming in there. Then on the south side of town, down by Garfield, there's the group that's owned that property where the Stuart Meadows driving range.
The Kogak.
I drive by there every day.
What's going on in there? What's happening in there?
You're going to see the first building that's coming up on the corner there is a 3-story building for Providence. That's a 63,000 square foot building.
Wow.
For Providence.
For Providence.
For Providence Health Services.
Health and Services.
Yeah,
okay.
Yeah. And I understand they may be even looking at some more in there, but I know the Kogak group is working on some apartments that they're going to be building in there. They're realigning Myers Avenue. My understanding, if you've played the golf course at all out there, there was a home on number 8 out there.
Right.
That's going to be some integral part of the new development, and some office buildings, some restaurants, and I know they've got some industrial land out there. So
is that Lazy Creek or Larson Creek? Lazy Creek that flows through there now through that property again. It's been restored.
The
channel's been restored.
Yeah. There's a creek that goes through there.
Yeah.
I'm not sure what it's called. I do know. In conversations with the owners, the Kogat people, I mean, it's taken them years to get permits. They've kind of had to move that creek.
Yeah.
And it's, I guess it's just changes in personnel at the Army Corps of Personnel, and the file gets lost, and who knows what's happening.
My wife used to work at Tea Time Cafe, so Ed and I used to be able to eavesdrop on some of the conversations on that, and it was long process.
Is that area going to be something like the Northgate stuff? Isn't it then down there? You're going to have all this kind of mixed use, mixed complexes
that's
down
correct,
there, and there's enough business to handle all this.
And there might be
I guess is what you're saying,
that's going in there too. I might have even heard that at one of the site plan hearings.
Well, there's a lot going on, that's for sure. It's good to hear. I mean, there's more. We got one more segment. We're with Frank Mania and Guy Giles here on the Real Estate Show. No, don't you dare go away. Got a lot more to talk about here this weekend as we get ready for Christmas. And look at that, a new year coming up as well. We're coming right back to KMED after this. The Real Estate Show continues here on KMED this December Saturday of 2016. Wish you all a Merry Christmas. Christmas next weekend. And we're back next weekend, by the way, on Christmas Eve with a show with the Rogue Valley Association of Realtors. And 2 weeks from today on New Year's Eve, we'll talk about Airbnbs and what's going on in the Rogue Valley and how people are using their homes and their properties, vacant rooms, vacant places, and actually making some money. You know, it's okay to do that. You know, you can make some money on your house. It's all right in your property, right?
Are we going to be done with the show in time for me to go to midnight mass?
On New Year's Eve or Christmas Eve?
Yeah.
Yes, I think we'll be plenty
but
time
I have a
for
hard
you.
time. I haven't been in a while.
Well, the building may shake or come down if you actually go into one, so you probably ought to stay away. Anyway, welcome to the show today. Guy Giles from Bank 34 Mortgage is our resident mortgage expert here on the Real Estate Show. We've learned today that interest rates have climbed a little bit, but you want to check with your lender to make sure you still qualify if you're out looking for a home. Certainly agree with that. You also said there were some new things about VA loans that you want to share with our listeners today, because I know you do a lot of VA loans. And those are terrific. Those are the best loans out there, actually. So what do you got for that?
Yeah, well, I mean, it's not a lot of new stuff. But just to just kind of go over a couple of things. For one, and this affects conventional loans around here too, meaning what Fannie Mae and Freddie Mac can buy. After they're finally raising the loan limits a little bit around here. They've been at $417,000 for years. Yeah. I think 2008 or something like that. And they're going up to $424,100, which isn't going to give a ton of difference, but it can a little bit. I have a lot of people that are trying to stay under those. The VA loans, they are 100% financing. So if you do decide you want to go above that amount on a VA loan, you just have to have 25% of the difference. So if you are buying one that's $20,000 over that loan limit, you have to have $5,000 of your own money. So they'll still guarantee them bigger than that and do it. I just was kind of going through some guidelines. I ended up picking up a client last week on a VA loan, somebody that had heard that I'd been doing a ton of them, and we'll actually do a manual underwrite. So there's a lot of places that require a 620 credit score for a veteran. And we'll do a manual underwrite. So if you have a couple of them that are in the 580s, 590s, so we've got qualified. I mean, if we can help you and get your credit score up in the meantime while you're shopping or something, the better we can get your rate, the better you're going to do buying a house. Or the higher we can get your credit score, the better rate you're going to get. So it does behoove you to kind of work on your score, and we can. I'm not a credit repair place, but we can help with that a little bit.
And the less debt you have, the easier it is to get that loan also. So, there's to balance that either way.
Yeah, right. Absolutely. And right now, especially student loans are the biggest ones that we're seeing.
It's the biggest problem, isn't it? It's going to be
several
for years and
now.
years. Yep.
Yeah, and I don't know. I'm hoping something happens with these. There's a lot of people on reduced payments on those things, but they're still paying the higher rate. And it's almost like in some ways, it's almost like one of those negative amortization loans that we used to do in the old. Well, I say we. I only did one in my whole career, and the person begged me to do it. I never engaged.
I'm down
in those loans to begin with.
Yeah, I'm down to a year and a half left on my student loan that I've been paying. On don't ever co-sign your loans.
Right.
I got a year and a half to go, and I'm done. And I'm so happy you wouldn't even believe that one.
Well, some of the amounts in some of these student loans are just unbelievable.
They wreck the debt to income ratio of a potential home buyer. That's what it does.
Like dental school, I mean, like $500,000 or something.
And how do people do this? That's why rural opportunities exist around. We're going to be running out of time. I want to ask Frank, as you go around the so-readies, the economic, the commercial world of our valley, tell me what about the cannabis industry is it taken seriously around in certain circles, or just kind of give us a status of where you see that happening? Because we have $1 billion plus industry that's right in our midst here. As someone said, 2,500 grow sites in Jackson County. What are people taking it seriously, or tell me what that is like?
Well, that's a tough question. It is. I know because there's still so many unknowns out there. And I kind of had a realtor call me one day and said they were out showing property and wanted to know what the zoning was for.
Yeah.
And so I actually referred him to the Brad over at Home Builders Association, and the answer was, that's a really tough question because there's a lot of guidelines out there that have been written. There's ordinances out there that still need to be created right now. Do I think the industry is taken seriously? I think we're moving in that direction. I mean, there's a lot of people coming to this area because of the industry.
Absolutely.
Looking for land and leasing land, and that's we've still got the issue of on the title and escrow side of how do we deal with it, and we actually can't if we know there's a lot of cash involved.
It's all cash.
It's all cash, and we can't pass those funds through our account into a bank because the banks are federally regulated, and they can't take that money. So that poses an issue with us through escrow. If you're buying a piece of land and we don't know
and the title companies will not take cash. Remember,
we can't
they're not going to take your cash.
Right, because we can't pass it on to the bank because they can't take it. Okay, but if you're just buying a piece of land and we don't know what you're doing with it, and we can write the title insurance and the ownership. Okay, but if we know there's cannabis involved and there's a lot of cash involved, that poses a problem with depositing that money in our relationship with the bank because they can't take the money.
Yeah. Well, and Joe, what'd you say about leasing? You're hearing people leasing for grow sites now instead of buying properties.
Actually, just heard Frank mention that last segment. That had not occurred to me. I thought, most of this was a land grab to get control of property, but there are a lot of landowners that I would imagine be like putting a cell tower out there, except for all of the people that come with it that you don't have with a cell tower.
Yeah,
but you lease a portion of your property. Wow, what a
tell me
potential moneymaker.
And tell me just one thing before we get out of here. How come there be 2,500 grow sites in Jackson County? Do they all have licenses for all this? Is that?
Gosh,
do you know? Is that true?
That's not a question for me. That's a staggering number, and I can't imagine. I know there are only a handful of recreational licensed sites through the OLCC established already.
I don't get
so
that
these must be medical marijuana grows or already established grows that had some kind of grandfather presence. Because
it's going to be interesting.
There's a slow process to get through the OLCC to become a big recreational type grow.
And we came a long way through 2016. Okay, we'll see what happens next year if more of this is ironed out and make it easier for them to do business with. Because that would have effect, I think, on the local economy by being able to use this money, through the banking system instead of all cash, running it away and do whatever else they do with. There must be just mounds of cash somewhere
huge
in Jackson County.
It's
somewhere just sitting somewhere,
and it smells funny.
Yeah. Anyway, Guy Giles,
that's how they could tell.
Last work for you today. Here's how can people get a hold of you to talk about loans right now?
Well, just call me on my cell phone anytime at 541-944-6987, or you can just look up Guy Giles at Bank 34.
Keep helping our veterans.
All right.
Love you for that.
Love our veterans.
Good luck to you. Have a happy Christmas, happy holiday, and New Year as well. We'll see you boys on the other side of 2017, all right?
Merry Christmas to you.
Good job, Frank.
You bet.
That'll do it for the Real Estate Show here on KMED this weekend. Pete Belcaster and Joe Brett, have a great weekend, everybody. We'll talk to you next Saturday on Christmas Eve, right back here on the Real Estate Show on KMED. God bless you all.
You've been listening to The Real Estate Show on KMED Radio, presented by the Rogue Valley Association of Realtors, along with John L. Scott Real Estate of Southern Oregon and Bank 34 Mortgage. For guest contact information, download our free app, or to watch a past show, visit us online at realestateshowOregon.com. This show is produced by Table Rock Productions. Join us again next weekend for Southern Oregon's one and only Real Estate Show on KMED. And thank you for making the Real Estate Show part of your weekend.